Welcome to Second Take, the show that focuses on the issues behind the news. This week, Mining Weekly editor Martin Creamer joins me to discuss Sibanye-Stillwater's investment in DRDGold, SA's good position in coal and renewables, and the Minerals Council South Africa's decision to take the DMR to court. Welcome, Martin.
Hi, Sashni.
Now, Sibanye-Stillwater is hoping to give international prominence to DRDGold's expertise.
Yes, one of the things that investors are really demanding these days is called ESG. And the E stands for environment, the S for social, and G for governance. And these have become crucial issues in mining. And from an environmental point of view, we've had a tremendous skill in recovering precious metals from mine dumps. You know, this goes back to Anglo-Americans' ergo days, many decades ago. And currently that expertise is in the hands of DRDGold. And yesterday, during the period where they're publicizing the Joburg and Daba ahead of time, the conversation was widespread, but personally raising this issue was Sibanye-Stillwater CEO Neil Froneman, saying that the DRDGold expertise is really timely and it should get much more international prominence because it could be used around the world, not only for gold but for platinum group metals but also other metals. And so he was saying that this investment that he's got, which involved him getting shares in DRD and DRD getting assets to actually recover the gold from and infrastructure as well, he wants to give it a lot more prominence. Of course, he is thinking of changing his primary listing. And if you look at these two companies, both have the exact same listings at the moment. You've got a primary listing in Johannesburg and a secondary listing in New York. It seems that the consideration now is to get the primary listing in New York, which I hope won't backfire on South Africa as some of these other international listings have done, particularly with Anglo going to London. What they're saying is they need equity. They need to get equity capital rather than debt. And it seems as though the vision is to put these two companies together because if he exercises his rights, by the end of the year, Sibanye-Gold can become the controlling interest in DRDGold. And then this could be, in his view, really celebrated throughout the world. At the same time as you're having terrible disasters with some of these tailings dams. So tailings dams, they can be a money spinner if you do it well and you remove the tailings and you reset the residue in a much more better designed modern situation. But you get all the value out, so you've got a great commercial proposition. You're also releasing that land for development. So it's what is needed. We don't need these dumps around. We see that if they're not built properly, we saw in Brazil how they can kill 200 and 300 people at a time, which is unbelievable. So even back here, they must really make sure that they look after any design that has got a risk. But what the point is being made, that South Africa's got this incredible expertise, which the world is needing at the moment, but we could use it much more here and around the world, and it seems that maybe there will be a coming together which would strengthen the two companies internationally.
And tell us about South Africa being well positioned to take advantage of coal exports and renewables.
Yes, we are in a very good position here. We've got a situation where we're very dependent on coal, but we've also got a lot of coal for export. We know that the coal mining should continue because of the incentive to export. So the supply into the domestic needs, which are likely to plateau and then start declining, will still be there for decades. So that keeps one side of the activity going. That's the coal mining and the export of coal and the revenue generation, because a lot of the companies in East Asia and Asia, they are still developing coal-fired power stations. So, that export has got a firm demand going forward. So we're getting revenue from that, but at the same time, we've got a wonderful sunshine here, and we've got prime wind. So we should go hell for leather into creating renewable energy, make use of that, so we're getting a cheaper energy coming in, because it's now proven that it's a business case. It's not just to mitigate climate change. When you put in these photovoltaic cells and you use up the wind the way we know we can, because we've got surprisingly prime wind here, we could get a very low cost electricity. which would be so beneficial as well, because we've got this minerals and energy complex which has built this economy, this modern economy, post-agricultural economy. And it's starting to really stutter and starting to decline very, very badly because there's no longer cheap electricity. That could be changed because the sun and the wind can give us cheap electricity again. And we've got other means also. We've got fuel cells. We've got all sorts of things that we could use. And at the same time, we're not losing out on that foreign exchange, and our coal that will be needed by Eskom for decades to come is still likely to be there. So we've got like the best of two worlds.
And lastly, the Minerals Council South Africa is hoping to get legal relief from certain clauses in Mining Charter 3.
Yeah, this is very interesting because, we know that the atmosphere between Minerals Council South Africa and the Department of Mineral Resources is a good one. There are smiles all round. You can see the body language when they're together. But this was a sort of a procedural matter. You had to respond by March the 26th. If you didn't, you must not raise the issue again, because you take the government to court, and then all of a sudden, you don't respond on the closing date. You've got to do that. So it was important that the response and the judicial review position was put in place, but we don't see any real hostility between the two. And probably if they'd had more time, this would have been resolved. Again, you also, during pre-election times, you don't want things to just look so cozy, there has been fighting going on. It's changed dramatically, but it might be best for the courts to decide certain things, or maybe the two will come to an agreement even ahead of that, because this was a procedural matter. They had to go back to the court, but they do want, clauses in that Mining Charter 3 sorted out. So those have to be sorted out, and if they cannot be sorted out through discussion, we see the Department of Mineral Resources said yesterday, no, why don't you guys continue to talk to us? Well, they've spoken about many things, and this is still hanging around there. So they had no option but to go in for judicial review. And at the same time, either it'll be solved through judicial review, or as these negotiations continue going into the middle of the year, etc., it could sort itself out on its own.
Thanks for speaking with us, Martin.
Great pleasure, Sashni.
That's it for today. Join us again next week for more news analysis on the local and global mining industries. And don't forget to listen to the audio version of our Mining Weekly daily email newsletter.